So the answer is false, but it's a bit of a trick question. Um, there are some niche programs. Your main programs through Freddie and Fannie, yes, you need to have good credit. You need to have, the proper DTI, and you need to have a down payment. However, there are programs out there where if you have two of the three, there are options. In other words, let's say that you had good credit, you've got a down payment, but because you're an entrepreneur like me, you are a business owner, you write off a lot on taxes so that your taxable income is really low. Well, that's what the lender looks at. They look at that taxable income. Well, there are bank statement programs out there where a lender will actually look at the deposits into your bank account and they'll count all of it as income. So basically, if you're not reporting or you have a lot of write offs for Uncle Sam's purposes, there are programs out there if the income isn't there, but the credit and the assets are, that you can get a loan. Same thing if you have the income and you have the assets, but you don't have great credit. There's some hard money, portfolio lenders, and there's other options out there. So in other words, if you have two of the three between the credit, the income, and the assets, there is a loan out there. It may not be the most favorable, best terms on the market, but you can still get a loan and get into a property even if one of those is lacking. The other thing too to consider is there's ways to approach. For example, if you don't have good credit, there's credit repair. If you don't have great income, you can get a co-borrower, right? If you don't have the assets, there's down payment assistance programs. There are 401k loans. You can get a gift. So there's a lot of options, to make it work, and that's where obviously a more in-depth, specific conversation would take place.